The value of the US dollar in the open market is determined by a variety of factors, including supply and demand, global economic conditions, interest rates, inflation, and political stability. As the world's dominant reserve currency, the US dollar is heavily traded in the foreign exchange market and is used in international trade and finance. One major factor affecting the value of the US dollar is the monetary policy of the Federal Reserve. The Federal Reserve has the ability to adjust interest rates, which can affect the supply of dollars in the market and impact its value. When interest rates are low, investors may seek higher returns in other currencies, which can lead to a decrease in the value of the dollar. On the other hand, when interest rates are high, the dollar may become more attractive to investors seeking higher returns, leading to an increase in its value. Another factor that can impact the value of the dollar is the level of inflation in the United States. High levels of inflation can decrease the value of the dollar, as investors become concerned about the purchasing power of the currency. Conversely, low levels of inflation can support the value of the dollar, as investors may be more confident in the stability of the currency. Global economic conditions also play a role in the value of the dollar. If the global economy is strong and stable, investors may be more likely to invest in U.S. assets, which can lead to an increase in the value of the dollar. However, if the global economy is weak or experiencing uncertainty, investors may seek safer investments outside of the U.S., which can lead to a decrease in the value of the dollar. Finally, political stability can impact the value of the dollar. If the U.S. political system is perceived as stable and predictable, investors may be more likely to invest in U.S. assets, which can lead to an increase in the value of the dollar. However, if there is political uncertainty or instability, investors may be more cautious and avoid investing in U.S. assets, which can lead to a decrease in the value of the dollar. Overall, the value of the US dollar in the open market is influenced by a complex interplay of factors, including monetary policy, inflation, global economic conditions, and political stability. Understanding these factors can be important for investors and traders looking to make informed decisions about buying and selling US dollars. On April 4, 2023, it was announced that Brazil, Russia, India, China, and South Africa, BRICS, are considering launching a new currency that would be used for settlements between their countries. This move could potentially have implications for the position of the US dollar in the global economy. If the BRICS countries were to successfully launch a new currency and use it for settlements between themselves, this could reduce their reliance on the US dollar in international trade and finance. This would in turn reduce the demand for the US dollar, potentially leading to a decline in its value relative to other currencies. However, it is important to note that the success of such a currency would depend on several factors, including its stability, security, and widespread adoption. It is also unclear whether the BRICS countries would be able to completely replace the US dollar with a new currency, as the US dollar still dominates international trade and finance. Moreover, the launch of a new BRICS currency could potentially face regulatory challenges from other countries, including the US, which has been cracking down on the use of cryptocurrencies in recent years. Overall, the launch of a new BRICS currency could have some impact on the position of the US dollar in the global economy, but it is unlikely to lead to an immediate and significant shift away from the US dollar. The success of a new currency would depend on various factors, and the US still has significant economic and political leverage to maintain the position of the US dollar in the global economy. The Russia-China-Saudi alliance has been identified as a potential threat to the dominance of the US dollar in the global economy. The alliance aims to promote greater economic cooperation between the three countries and reduce their reliance on the US dollar in international trade and finance. Russia and China, in particular, have been making efforts to move away from the US dollar and establish alternative payment systems that are not subject to US sanctions or influence. For example, they have been promoting the use of their own currencies, the ruble and yuan, in bilateral trade and have established a cross-border payment system to facilitate this. In addition, China has been promoting the use of its currency, the yuan, as an alternative to the US dollar in international trade and finance. It has established swap lines with other central banks, allowing them to access yuan liquidity and reducing their dependence on the US dollar. Saudi Arabia, as one of the largest oil producers in the world, has traditionally priced its oil in US dollars. However, there have been recent moves towards pricing oil in other currencies, such as the yuan, which could further erode the dominance of the US dollar in the global economy. If the Russia-China-Saudi alliance is successful in reducing their reliance on the US dollar, this could have significant implications for the global economy and the position of the US as a dominant economic power. It could lead to a shift in the balance of economic power towards these countries and reduce the influence of the US in global affairs.